The Nikkei just plunged 6.44% in a single week, marking a historic destruction of semiconductor wealth. Welcome to the D-Risk Weekly Global Markets Brief. It's Saturday, July 18th, 2026. Our theme this week is the AI trade's first crack. The biggest dislocation in macro markets right now is how a sudden geopolitical shock in the Middle East is colliding with a massive reassessment of tech valuations, sucking the oxygen out of the room for growth assets. Alex, let's start with the international tape, Asia and Europe.
Thanks, Sarah. The AI trade's first crack is leaving deep scars across Asian equities. The Nikkei plunged 6.44% to close at 64,141. This massive sell-off broke decisively below the 50-day moving average of 66,663, signaling a severe loss of short-term momentum. Meanwhile, the Hang Seng posted a weekly gain of 1.60% to close at 24,562. This upward move is a pure bull trap as the index remains suppressed under an active death cross with price below both key moving averages. In Europe, Germany's DAX edged down 0.94% to 24,831. Conversely, the UK's FTSE 100 edged up 0.98% to 10,600, insulated by its defensive utility weighting and local M&A tailwinds. Sarah, the divergence between European resilience and Asian tech vulnerability is striking.
That stark contrast between the FTSE's defensive resilience and the severe technical breakdowns across Asian indices tells a clear story of capital seeking safety. If international markets are already buckling under the weight of this semiconductor reassessment, how much damage is this tech rotation doing to Wall Street? Alex, break down the U.S. and cross-asset signal.
The damage is significant, Sarah. The Nasdaq 100 slid 1.55% to close at 28,773, weighed down by Chinese AI competition and a post-earnings drop in Netflix. The broader S&P 500 also slid 1.06% to 7,498. Looking at the bond market, we are flying blind on the 2-year Treasury this week, so we will focus entirely on the long end. The 10-year yield drifted higher by 0.44% to close at 4.57%, keeping restrictive conditions firmly priced in. In the currency space, the U.S. dollar index drifted lower by 0.22% to 100.75, maintaining its bullish posture above its moving averages. In commodities, crude oil posted a massive weekly gain of 15.52% to close at 82, driven by the Iranian port blockade. However, it remains trapped below its 50-day moving average, signaling technical consolidation rather than a confirmed breakout. Gold slid 2.23% to 1413, confirming a death cross as it breaks below key support. Finally, the VIX surged to 18.77, reflecting a sharp deterioration in risk appetite as geopolitical fears compound the tech sell-off. Sarah, back to you.
Thanks, Alex. The collision of a Middle East energy shock with a structural semiconductor sell-off means our theme is now a reality, forcing a violent rotation out of growth. When the Nikkei plunges 6.44% in a single week, it proves that the AI trade's first crack is a global structural event, not just a localized tech pullback. Looking ahead, all eyes are on the ECB rate decision and global PMI data next week. If European manufacturing data comes in weak, expect the DAX to decisively test that 24,831 closing level we saw today. That's all for this week's episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in, and catch you in the next episode.